Hey folks, good morning. It's a Sunday morning, and as usual, we look forward to what the markets have in store for us, considering that it's the expiry week for the month of May. So we start by first looking at how the markets performed last week. And as we can see, Nifty uh, uh, made a small correction, went through a small correction. I mean, it did well on Monday. It gave about, I think, 200-day range and went up as far as like 18,450 odds. But then it fell over the next 3 days, ultimately ending 0.6% for the week. And the sectors which outperformed included the realty sector and the Nifty IT. And as we can see, most of the sectors underperformed, with the pharma and the healthcare sectors being the main laggards in that case. Also, the oil and gas sector did not perform that well. But the broader markets continued their outperformance, and major areas where we saw very decent gains was in the refractories, the hospitality, the IT small cap, the plastic pipes, the alcoholic beverages, even the QSR. Some of the QSR companies also gave decent returns over the last week. So moving on, we'll first go into the Nifty charts and see what happened. See, the week before, we saw Nifty in a tight trading range from about 18,200 odd to 18,350. So that range got expanded. So now the new range is 18,050 levels to about 18,450 levels. This is the new range for the Nifty. And, what can happen is if you break 18,050, move towards 17,800, 850 levels is possible. And if we break 18,450, then we have a consolidation. I mean, more of a supply zone, I would say, till 18,600 levels. So what can happen is Nifty can enter into a new range between 18,300 odds to 18,600. If it remains bullish, but once it crosses 18,600, I would expect it to test the new highs, the previous highs, sorry, which is at around 18,900 levels, and ultimately make a move towards 19,300, 350 levels. So when that will happen, we can't say, of course, but till the time Nifty consolidates or moves slowly upwards, in upward consolidation bands, we say that the short-term trend is still up, and we can expect Nifty back in the back above 300 and going into 18,500, 18,600 levels, provided, of course, 18,050 levels hold. So let's see what the futures analysis, Nifty futures analysis gives us in the last 5 days. As you can see, it's nothing clear is coming out. The first day was in long build up, the next day was short build up, then some long unwinding, again some little bit of short build up, and then some short covering, which is very typical of a market which is in a range and somewhat directionless. So moving on to the options chain, what we can see here is that the 18,200 level is where the maximum call and put interests are placed. So basically what the market is seeing is that what the major market participants are feeling is that again, it's a consolidation in a price band of say about 160 odd points in either side of 18,200, which again gives us a range of 18,050 to around 18,350 range. So the options chain again tells us the range is somewhat similar to what the charts have been telling us. The highest call additions have been added at the 18,450 levels, while the highest put additions are at the 18,000 levels. So a broader range is like 18,000 to 18,450. So next, let us look at some of the other Nifty components. Like we start with Nifty Bank. And we were anticipating Nifty Bank to, test the previous highs last week. It did. It actually fell short by 0.1%, by 0.1 point. So 44,151.8 was the previous high. Last week, Bank Nifty made a high of 44,151.7. Can you believe that? It failed to cross the previous high by just 0.1 point. It's like a batsman getting out at 99.99. Doesn't happen, right? So anyway, that's what it is. So we are seeing again that at least the good part is that it's taking support at the 43,500 levels, and the anticipation is that sooner rather than later it will break above this 44,180 pivot resistance, and move towards 45,000 level. Whether it can happen in the expiry week or not sure. Generally trending moves do happen in expiry weeks, but we'll have to see whether it happens next week or not. But yeah, for Nifty to break up above the range, definitely Bank Nifty has to take a major step. Bank Nifty has to play a major part. Nifty IT. Nifty IT was one of the outperformers last week. So yeah, if it continues its outperformance, it will move into the higher band, say from 28,300 to 29,100 would be its next band of consolidation. Which again is not a bad thing if it moves up, consolidating in upward moving bands. It's a good thing actually. The move up, the up move will be more sustainable. In that case. Let's see what Nifty what Reliance is doing. So Reliance again, faced resistance at the pivot resistance at around 2,500 levels, and came back to its support, which is at 2425 levels. So as of now, it seems like it will stay in this band for some time. If it stays in that band, it will, help Nifty also to, defend the 18,000 levels. So both Nifty IT and Reliance are more of defensives in this case. Like, if they hold on to their support, then Nifty will manage to stay above 18,000 levels. If they break down, then they will take Nifty down with them. But if Bank Nifty manages to go above the resistance levels, it can actually take Nifty also along with it. So Nifty's up move depends more on Nifty Bank than on anything else, I would say. So that's all, I guess, for the markets. I have an announcement to make actually. So we are starting with our first batch of options training program, and from next month, around 10th or 11th of June, the program will be conducted over weekends as it is suitable for as we are targeting working professionals to join this program. We already have a few registrations in place, but if we get a few more registrations, nothing like it. It's a 3-month program where the first month will be spent in understanding the concepts and strategies, and the next 2 months will be more of a practical live market experience with hand holding, doubt clearing sessions, and all that. And these will be conducted, as I said, through live webinars during the weekends. So details of the content are presented. It's also available on our website. So if you really want to register, if you're really interested, visit this page or drop an email to sales@goforstocks.com. So waiting to hear from you on this. And like always, this is who we are. If you like our content and wish to hear more from us, you can read our blog, uh, subscribe to our Telegram channel, as well as to our fortnightly newsletter. The links are provided. And before we end, the disclaimer, like investment in securities market are subject to market risks. Read all the related documents carefully before investing. The securities quoted are for illustration and are not recommendatory. And the registration granted by SEBI is in no way a guarantee of performance of the intermediary or provide any assurance of return to investors. So that's all for now. Have a great day and keep watching us. Thank you. Bye.